please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, markets at this point in time continuing to show more weakness. The weakness has expanded in the mid-cap space. Now it's 0.5% lower, and the Bank Nifty as well is following with almost 0.5% in terms of cut, and the advanced declines are very important to monitor. It's clearly on the side of the bears at this point in time, or at least the bulls don't have the upper hand. It's two stocks in the red for one in the green. As you can see, it's very sharply gone in favor of the declining stocks. One of the stocks that's also showing pressure is RBL Bank. Nothing wrong with the top line. Loan growth was excellent, but there was a bit of a miss on the slippages front, on the asset quality front. We're just being joined by Vishwavir Ahuja, Managing Director and CEO of RBL Bank. Good morning, Mr. Ahuja. Let me straight away get to the margins. That's a pretty picture. It's improved. What went right?
The NIM, like you very rightly said, is at 3.89%, which is indeed at an all-time high. And it is the result of a lot of hard work that we have done over the years to, make our business and operations much more efficient, and both in terms of the mix of liabilities that we have and in terms of the cost of funds of the bank, and so on and so forth. So I think we should be able to maintain the NIM levels. I don't expect any moderation in the short to medium term.
Mr. Ahuja, good morning. Slippages increased in Q3 while provision coverage ratio declined for the bank. What happened there?
No, so again, let us look at it in terms of the NPA position, and also let us look at it in terms of credit costs, and then let's talk about coverage ratio. Let's look at it in that order, if it's okay with you. Except for one account, we'll talk about a little more. Our gross NPA position was 1.42%. Okay, 1.42% compares with 1.44% last quarter, compares with 1.46% the quarter before that. So sequentially, the asset quality of the bank as a whole is improving. Number one point. The credit costs of the bank, which were 30 basis points in first quarter, 22 basis points last quarter, were only 20 basis points this quarter, and I am stating to you that they will be even lower in the fourth quarter. So even in terms of credit costs, they are lower, or trending lower. The last point is on the coverage ratio that you mentioned. So there, we have mentioned even in our commentary and press release that there was one corporate account which had to be classified NPA at the year end. This is an existing account, which is otherwise an operating account with us. This is under, there is a certain amount of, if I may say, restructuring going on there, which should enable it to become a standard account within the next few weeks, well within this quarter. So it had, for various reasons, we have had to take it for a short period of time, and that was equivalent of 14 basis points of NPA and about little over 4% in terms of coverage ratio, which is sort of a matter of a few days. So, on a steady state basis, this would not be there. And if you just sort of back it off, we are back to a 56, 57% coverage ratio, and, a steady state 1.4 odd% gross NPA.
Okay. Well, I take your point. This has been happening to quite a few banks. One account which in course of time is getting upgraded. But what's your guidance on loan growth and even margins?
See, at this level of NIM, we are kind of happy. Actually speaking, anything above 3.75% NIM, and if we can maintain a loan growth of 30% plus, I think would be a fairly satisfactory outcome. We are presently confident that we should be able to sustain that for the short and medium term. And that's been our previous guidance also. And based on the way things are panning out and how our businesses across the board are growing handsomely and demonstrating very strong momentum, like you said. We are confident of being able to maintain a NIM level between 3.8 and 4%, anywhere in that range, hopefully on the higher side, and a loan growth of excess of 30%, and improving return ratios in terms of ROA, etc., steadily over time.
Okay, we'll leave it at that, Mr. Ahuja. Thank you very much for joining us with those details. And it's important to note that the small hiccup in slippages is something which the bank expects is going to be overcome very soon. So that point needs to be noted. You know, it's a severe yo-yoing in the stock markets as far as the Sensex and the Nifty are concerned. They are not giving up their gains easily, but there is a bit of bother in the mid-caps and the Nifty bank. Actually, even over there, there's a lot of volatility.
Yes.
I mean, we are still a couple of days. Okay, tomorrow is the last day.
Tomorrow is expiry, yes.
Maybe that explains a lot of volatility in the markets, and especially at such high levels which have been climbed very rapidly. Yes. Okay, let's actually stick with the loan theme, like Indiabulls Housing Finance. Here's another company that gives loans. SE Investments has seen a stunning rally of 56% this month itself. But now you will not find it in the name of SE Investments. This is a new name. Payslow Digital is the new name, and that's because they've launched a new loan dispersal app by this name, Payslow. Oh, it's Pesalo. I thought it was some Italian name.
Pesalo.
Okay, I'm so sorry. I'm so sorry. So Sunil Agarwal has joined us now. I'm sorry, Mr. Agarwal. It didn't occur to me that this is as simple as that. Pesalo. Can you tell us, I mean, how does life become easier because of Pesalo? Is it faster disbursement?
Good morning. No, it's not technically faster. It's an extremely simple to use, a powerful tool which is poised to disrupt the dynamics in the MSME lending space. It has been designed to eliminate the presence of middlemen, reduce corruption across the value chain, and enable any individual to borrow an amount ranging from 10,000 to 50,000 rupees from the convenience of their own mobile device.
Okay.
It's an end-to-end digital solution with key processes like KYC, legal documentation, disbursement and repayment happening within the app. The most important thing is that it is not a quick loan. We do not promise a quick loan, but we promise a fully legal, compliant, fair and smart loan transaction with minimum formalities and maximum convenience to the customer.
Okay. So does this mean you have lower costs? Is this a high margin business for you?
We believe that the cost would be lower, but what we are looking at this for next at least 4 quarters is a very, very strong growth. We are expecting a high volume of applications to come in. We are ready to handle about 5,000 applications a day as of now, and let's see how it goes off. A customer care center has been created. And what we are looking at a very high growth. We are approaching one and all for raising funds and creating a coffer for that.
Mr. Agarwal, good morning. But is there a risk of subprime lending here?
No, it's not a subprime lending. Look, what we do is always an income generation loan. We have about 112 items which we have listed.
Okay.
So we would be probably preferring those 112 items. It's an algorithm-based app, so the app decides a lot of things. We are never and ever going to do any consumption loans via app.
Okay, fair enough. What part of your business is expected to come from this app?
So far, ma'am, we are doing about 32% of our business disbursements in the small income generation loan segment. And going forward, I believe it would go up to about 70-75% of our disbursements, which are also expected to grow over next 4 to 6 quarters. And they are going to grow, we expect them to grow by leaps and bounds, starting from this quarter itself.
Okay, so generally, what will your loan growth be this FY18, you think? Because, I mean, we're almost at the end of the year.
FY18, we will end up, FY18 will end up doing about 26 to 28% more than that of last year by the year end. And for next year, we have quite a few very good
Aggressive
numbers what we
plans.
expect,
Okay.
and of course it all depends upon what the outcome of the app and how does that app stabilizes in the next coming weeks.
All right.
As any technical product has any issues, it would also have some glitches in the starting, but we are very sure that, and it's an in-house developed app, so the entire development cost what we have incurred is far lower what anybody
Okay,
else
so
would have
what will your
incurred.
margin be, you think, at least for FY18?
My FY18 net interest margins are running in about 7% kind of a range. So we expect them to grow by reduction of our cost and also cost of borrowing going forward. And of course, a part of the reduction in cost is going to be passed on to the customers as well. So we look forward for higher volumes at better margins.
All right. Thanks a lot, Mr. Agarwal, for your time today. Wish you luck with that. Let's move on.
Certainly sounds like fintech at its best if it clicks.
If it clicks, yes. The market, by the way, is very volatile. There are a couple of stocks trying to bat for the bulls. I think HDFC is the one which is trying to, raise its hand, and that stock is at the high point. And of course, IT stocks, HDFC in particular, normally makes big move in expiry week and on penultimate day and expiry day. So that's one stock. But others, there's clearly a bit of a problem. Good time to invite our technical experts back. Ashwani Gujral and Prakash Kaba now joining us. Ashwani, quite volatile for the market. In fact, serious profit taking now in the mid caps. Your thoughts?
I hope no more missed out feeling. Okay. See, this is natural. The way this was going, this was waiting to happen. I've been saying for last 2-3 days, take profits because this will not sustain. Now, for the day, you are sitting on a large kind of a decline. I would think that the market will just not collapse in this manner. This is the kind of decline you should buy. And particularly on the tech stocks, the tech index is up 1.3%. So out there is the place where you buy. But I think Bank Nifty is now giving you a 170-point decline. So even there, people should take long positions. I would think once a bit of froth is taken out, again buying could happen at lower levels. Having said that, I think still good time to get long on TCS, which is a buy with a stop of 3100, target of 3250. HCL are doing extremely well. Chances are this will also participate. Yes Bank is a buy with a stop of 357, target of 375. And Tata Elxsi is a buy with a stop of 1070, target of 1120.
You had your early morning longs already on Nifty Bank and Nifty, you said, right? You've just added to them, you're saying?
Yes.
Okay, fair enough. What would be your stop loss for that trade?
Well, stop loss, the way I would look at it is probably 27,150 I had given you.
Yeah.
That should remain the stop.
Okay. Fair enough. Prakash, good morning to you again. You also went long on the Nifty, you're in the Nifty Bank. You staying with that?
I exited within 3 minutes, Nifty. Went short on Nifty, exited, I'm out now.
Okay, and what were you trading?
I'm trading 2 stocks. I'd like to do 2 recommendations here. State Bank of India looks good, can climb to levels closer to 330 zones, stop below 316. TS is also looking good. We can see a climb to around maybe 3,250 zones, stop below 3,100.
Okay, fair enough. Ashwini, quite a bit of selling in telecom stocks, Idea and Bharti. Thoughts here?
See, telecom has not really participated in the rally of the last few days, and I think chances are it may not participate because Jio revenues are assumed to be taken out of other stocks. So Bharti, Airtel, 200 DMA is around 430 thereabouts. So 430 is the stop or support you can look at on Bharti, but overall it's in a downtrend. I think similar case with Idea. I think instead of telecom, people are much better off looking at mid-cap IT and IT stocks in general.
Okay, are there any short ideas in DHFL? It's fallen a bit sharply.
Well, housing finance, some stocks are doing well, others are not doing so well. Yeah. So Diwan Housing, key support possibly lies, I think, closer to 570 thereabouts.
Okay.
So I would still be a buyer around those levels till it proves otherwise. But this is, you can say, after India Bulls housing, the stronger of the housing finance. But overall, housing finance is not inspiring great confidence.
It's not inspiring great confidence. But I tell you something, I think, Ashwini, the market is listening to you, your IT call. Look at the move in TCS now, 3170, and phenomenal, that big move in TCS. And NIIT Tech, 6.5% higher right now on NIIT Tech. That's your top F&O gainer. Any thoughts on NIIT Tech, Ashwini?
See, I've been saying that right now it does not matter as long as you do some tech. Okay. Later on, we'll see, you know, who does cloud and who does digital. NIIT Tech, definitely one of the leaders of mid-cap IT, but fairly vertical run from, I think, 680 thereabouts. So possibly look for some sort of consolidation for fresh entry, but this is clearly going to keep moving ahead.
So any news in Shriram EPC? I mean, that stock's gone vertical today, 14% higher, if I'm not mistaken. Shriram EPC, I do not know if there is any share-related news in this, but that's a big one. All right, well, gentlemen, thank you very much for joining us and flagging off the sectors and stocks that should be on traders and investors' radar. We'll touch base with you again on the hour. For the moment, let's move out of equities for a bit and look at the cues that usually drive equities. That's commodities. Manisha has joined in with the early morning cues.
Thank you so much for that, Lata. Well, the crude oil prices have started the day very flat on MCX. Remember, yesterday night we saw 1.5% of gains, and the global markets are trading just $0.50 off from those $70 per barrel mark. But some profit taking in the Asian markets is what's showing into the prices here. Overnight, even the MCX prices gained up by more than a percentage point. We are trading back above 4100 on your screens, and it is the US weekly inventory data today in the evening, where the expectation is that after 9 weeks of decline in US inventory, this week could show you a bit of a build-up, and that's weighing onto those prices there. The gold and silver prices continue to have a good run-up. We have seen prices gain up constantly in last 4 or 5 weeks. It is the weakness in the US dollar trading at a 3-year lows that has been supportive. So 0.5% of gains in silver, and gold prices as well, barely away, inches away actually, from that 30,000 per 10 grams of a mark. The base metal prices also have had it well. We have seen the steel and the iron ore prices continue to gain every single day in last 8 sessions, and that has been supportive for many of those non-ferrous metals as well. The copper prices hit a 1-month lows in the markets yesterday, but you have seen some opportunity buying come in for that. Lead is trading at around 8-year highs. We have seen strong gains come in for nickel and zinc, and that's on the back of strength in case of steel. Markets also are looking out for more data coming in from US and China in this week, and the expectation that it is going to be good also seems to be supportive. In the meanwhile, we have trading strategies from KDR Commodities, and they have a buy in case of precious metals. For gold, they're expecting the prices to gain up to 30,120 today. For silver as well, they expect the prices to continue to run up, and 39,150 is their target for today.
Hey Manisha, thanks a lot for that. I tell you something, this big move in IT is phenomenal, and I think I just reading yesterday's Infosys release where they're talking about artificial intelligence moving beyond experimentation. So what this market clearly is factoring in, and just look at the move in Nifty IT up 2.5%. TCS, of course, is leading it, but the others are also now trying to participate. Infosys is the one which is trying to participate and trying to correct that underperformance. Of course, TCS is in a different league altogether right now, 4% higher, but Infosys is the other one which is moving right now. NIIT Tech we've spoken about. So this is more than just a couple of basis points here or there. Exactly. This is market factoring in something big happening in the artificial intelligence space, in cloud computing. That was the big, of course, danger. And we heard recently, I think it was Mindtree's management who said that Indian IT story has just started and not has not ended. So I think phenomenal. Of course, right now we're in a bull market as well, but I think, and look at Mindtree, that's also reversed quite a bit from the low point. But I think for me, the big stock right now is TCS and Infosys.
Oh, absolutely. No taking away from the fact. And that's, one of the big India stories. If Indian IT is able to reinvent itself, it changes a lot of things really. If the market is guessing correctly about the turnaround in the business DNA of IT. This is not just an earnings improvement kind of move. What the market is trying to guess is that the Indian IT sector has probably reinvented itself. But of course, the jury is still out. We'll take a break on that note. Let's leave you with some more action we got from Davos. Here are some of the top corporate voices who spoke to Shireen Bhan, who is over there.
I think what the government is doing is absolutely right, though. It's time that we stop wasting taxpayer money on Air India, and it's a great brand and can be a great force multiplier, that company, if it's managed well. And so we hope that somebody who buys it will make sure that they strengthen the company and improve the brand.
With Apollo's new product strategy, new R&D products that are coming out, I think we are in a state where we will see healthy growths coming on the top line. But I just want to warn that raw material still remains a challenge. Margins are under pressure. They'll continue to be under pressure. That's where we want to see some reforms coming in, custom duties coming into for our raw materials that are being imported into India.
What's the plan in terms of fleet acquisition? How soon can we expect you to take your international plans?
I think we're on a rush now. We now feel, for many years I said it's not about getting there, it's about doing it right. We're now putting the foot on the accelerator.
Which means how many aircraft?
Well, we're hoping to get to 20 by August or so.
Of 2018?
Domestic, through all the tough time my friends have given me in the airline industry, we've got better in domestic, and domestic is actually...
What is the current market share?
We are still very small. We're about 5% of the market share. But interesting enough, in the Air Asia group this year, if we deliver what we say we're going to do, India will be number 3 in our group.
Okay, but you know what? Just wanted to take some more thought from Ashwini on this big move which is happening in IT. Ashwini, of course, your call was on TCS. I don't know. I think you may have already met the target or nearly there, but thoughts on, you've seen many market cycles. What is this telling you about the kind of move that we are seeing in IT?
See, there's clearly inflection point. IT index is at all-time high. Now, TCS, why I wanted to come in was, it's having a trend day today. It had a similar trend day before. Yesterday was consolidation. So TCS is likely to close around the highs of the day if this continues, and chances are it will, because you've seen IT index move up 2.5%. It's basically what happened with metals yesterday. So people need to get long on large cap IT as well as mid cap IT, and they will not feel the market correction all that much. Having said that, even the bank nifty is turning, so the force of IT could be so strong that even if banks have a couple of sideways months, I think you have a new leader. I would not consider bank nifty the leader of Nifty right now.
Okay, so you said TCS could have a trend day today, Ashwini. In that case, would you revisit your target of 3250 as well?
See, once something starts to have a trend day, everybody is piling on, and targets get achieved very easily. But a 5% move on the back of another 5% move, who is buying TCS? Not me and you. So it's clear, where big money is moving.
Oh yes, and big money numbers are also coming in at a run rate of 1,000 crores a day, the FI money for the last 3-4 days. So probably they're tanking up on the stocks they know well, which is IT companies. But just quickly before we let you go, Ashwini, the performance of HCL Tech is no meaner. That's another 3% up, and that's also a vertical rally. You wouldn't want to take a bet on that?
See, all of these guys, TCS is outperforming because it is at all-time high. But, when a change is there, the tailwind affects all stocks in the sector. It's like what happened with metals or any other sector. When the tailwind changes from headwind to tailwind, everything gets fired up.
Oh yes, that's what appears to be happening. Thanks, Ashwini. And of course, we're going to speak with you more often today, is my suspicion. We were talking about TCS, and incidentally, Shireen caught up with Rajesh Gopinathan, the MD and CEO at Davos. So let's hear what he had to say.
IT is becoming more and more linked to business. So the kind of spending that you see is a lot more dynamic. compared to more static kind of annual budgeting based fund. So that was what I was alluding to. And this whole shift to agile is something that we are very significantly embracing. And we think that we are leading the way in terms of going to what we call a 100% agile world.
Tell you something, the IT index is trying to do its best for the market, and look at a lot of stocks now. Mastech up 8.5%. I think the stock that's really now surging and should be on your radar is Hexaware. Again, a stock where you had that big rally, after that some consolidation, but it was the first actually which started that whole mid-cap rally, and that stock is now up about close to 4.5%. I know most of these are F&O names. TCS, by the way, has moved to high point of the day. NIIT Tech is at high point of the day. Tech Mahindra is at high point of the day. Tata Elxsi is at high point of the day. And as we mentioned, Hexaware at high point of the day. So some big shift, some big massive trend move right now happening in IT stocks. And you know, Neelkanth made this point last year about, you know,
that IT is his next pick.
IT is his next pick, after that metals.
He's right a year too late, but here he is right.
Yeah, and you know, I think Ashwini was also making this point that, you know, IT clearly could be the leader of this big bull market, and that's what you're seeing right now, Lata.
Green on the Sensex and Nifty, and as we count on to the budget, the market is getting fresh highs, and therefore I spoke to a long-term investor in India, Lucy McDonald of Alliance Global Investors, began by asking her about the significance of the budget, whether she would consider it very importantly when she makes her investments.
Really looking at is the impact that it will have on earnings, because at the end of the day it is earnings, liquidity and valuation which drive the various markets that we're looking at. So the impact of taxation on earnings is something that is going to be of importance to us.
Okay, so you must have picked up a lot of straws in the wind before the budget. What would you want to hear, say, on fiscal prudence, say, on corporate taxes?
Well, we want to see some, clearly prudence is something that we will favour, but we also want to see any impact where taxes can be looser, and that will benefit the tax, say, the earnings of the underlying companies. So that's really what we're focusing on.
Okay. Yes, well, the finance minister a couple of years ago promised that he would bring down corporate taxes but also cut down exemptions. But separately, there is a move on the part of some economists to ask for a long-term capital gains tax on shares. Will that be a big negative according to you?
Well, any extra taxes is generally a negative, and so it would not increase our enthusiasm for the market.
Right. Okay. What about fiscal deficit itself? You know, chances are that this year's fiscal deficit target of 3.2% is not going to be met. Economists expect it to be between 3.4 and 3.5%. What would you want to hear from the finance minister on the fisc?
Well, as I said, we are interested in prudence, but as far as the equity market is concerned, we don't need to have more tightening. We just want to make sure that the finances are being managed carefully. And we are much more interested in the growth and the impact of some of the measures that we've seen in the last couple of years moving out of the earnings momentum. So, for instance, the impact of the GST, and also the demonetisation. So they've been having a negative impact on earnings. So as we move into this year, it looks as if we might begin to see some better earnings revisions, which will catch up with the strong economic momentum that we're seeing. That, to us as equity investors, is more important than whether the fiscal deficit is 0.1 or 0.2, either side of expectations.
What are you expecting in the current season itself? The third quarter numbers for several consumer companies, for Reliance Industries, have all been above expectation. What is your earnings expectation for FY18 and, more importantly, for FY19?
Well, it looks to us as if the mid-teens to 19–20% is possible this year, which if achieved, will support the current valuation on the market. And as I said, the earnings momentum does seem to be now better supported in India relative to the rest of the world than it has been for the last few years. So that is encouraging, and it would be good to see that catching up with the strong sort of top-line economic growth.